Are you a trucker, owner-operator, a carrier, or simply curious about the details that keep our goods moving? You're in the right place. I'm Matt from LRM Leasing, and for the last 40 years, we have assisted thousands of individuals and businesses in becoming owner-operators and truck owners. One of the most misunderstood topics in this process is, you guessed it, insurance. We're diving into the nitty-gritty of trucking insurance today, demystifying the essentials that keep you rolling smoothly and safely. Whether you're new to the industry or a seasoned pro, there's something here for everyone. So let's hit the road and explore the basics of trucking insurance together. Too often, we encounter individuals and companies who are not versed in the basics of insurance. Insurance can often be looked at as a burden or a barrier to enter the market because of costs and requirements that are just red tape. Now, they're not wrong about the cost. It is expensive, but we want to educate you on the basics so that you can approach the insurance process with a better understanding so that you could set yourself up for success.
Now I get it.
Let's start from the beginning. What is insurance? Insurance is essentially a contract between you and your insurance company that protects you against financial and legal exposure in the event you are involved in an insured event under your policy. What the heck does that mean, right? I understand that's confusing. Insurance is like a safety net for your finances. Think about it this way. You pay a small amount regularly, and in return, if something unexpected or costly happens, the insurance company helps cover the expenses. Makes sense, right? It's a way to protect yourself from a financial hardship when life throws you a curveball. But why is insurance so important? Well, there's a couple main reasons, and if you know these already, pay attention because there's more coming, but let's get into it. The first and the most obvious is financial protection. It provides you protection in the event of an accident, damage to your truck or cargo, and legal liabilities. Without insurance, you could face significant out-of-pocket expenses that might cripple your business. Your trucking business is your lifeline. It's the result of your hard work, sweat, and sacrifices. It provides for you and paves way for a better life. Without insurance, you are one accident away from losing it all. Number two, legal compliance. In many places, trucking insurance is legally required to operate as a commercial carrier. Failing to have the necessary coverage can result in fines, license suspension, or even the shutdown of your business. Insurance is your shield, ensuring that you, your truck, and your business are safeguarded at all costs. It is a reliable safety net. You have to remember that. 3, business continuity. Insurance ensures that your business can keep running even when unexpected events occur, such as the accidents, theft, or damage to your cargo. It helps you maintain consistent source of income. Number 4, protecting your assets. It safeguards your valuable assets, including your truck, trailer, your cargo, and even personal assets you may have outside of your business. Insurance ensures you can repair or replace the assets without depleting your savings. Why wouldn't you want this? Number 5, risk management. Trucking is inherently risky, and insurance allows you to manage and transfer some of that risk to an insurance provider. This helps you sleep better at night, knowing that you're protected against unforeseen challenges. What can go wrong will go wrong. It's not a matter of if you're gonna need insurance, it's when. Number 6, contractual requirements. Many shippers, brokers, and clients require carriers to have specific insurance coverage to work with you. Having the right insurance opens up more opportunities, enhances your business credibility. Think about it. If there's a broker who requires you to have, a certain level of liability coverage and you're carrying the absolute minimum, how much more can you make by getting loads from them? This is just a small example. Number 7, just the peace of mind. Knowing that you're adequately insured provides peace of mind, allowing you to focus on your business operations without constantly worrying about what might go wrong. Kind of like I said before, to help you sleep at night policy. So who should have insurance? It's obvious, everyone. It doesn't matter if you're an owner-operator, a carrier, a broker, everyone needs insurance. Not the same insurance, but insurance. And remember, depending on what you do will dictate the type of insurance you need. What I'm saying is insurance is not one size fits all. You have to understand the requirements in your space and understand your business and what coverages will best help you protect your business and go forward. Here are the coverages we're gonna break down in this video. Physical damage, primary liability, general liability, gap, trailer interchange, cargo, reefer breakdown, workman's compensation, and lastly, errors and omissions. Physical damage is the coverage that covers the cost of fixing or replacing your truck or trailer. If something happens to it, for example, collision, vandalism, theft, fire, natural disasters, all these things are out of your control.
Why, God, why?
But what does that mean? Let's use it in an example and understand physical damage. Let's say you're driving along and someone sideswipes your truck. First, you would always try to get the insurance company's information for the person who hit you, but that's not always the case. But for this example, they took off and you're on your own. So you get your truck to a shop for an estimate and they tell you it will cost $5,000. Being the smart person you are, you knew that you will only be responsible for a portion of this repair, known as the deductible, and your insurance company will pay the rest. Assume you have a $1,000 deductible, which is very common. Your out-of-pocket expense is $1,000, and the insurance company pays the balance of $4,000. Now, if you didn't have insurance, you would be on the hook for the full $5,000. It's a lot of money. Now, if I lost you on the deductible part, that's okay. We plan to make another video that only focuses on the importance of deductibles and how they work. If that sounds helpful, let us know. The most important thing is that you understand what physical damage typically covers, and that is damage to your equipment. Also, physical damage is not just for people who are making payments. Even if you own your own equipment outright, don't be penny wise and dollar foolish by trying to save money every month by not insuring or under-insuring your equipment. Here's why. Let's say for this example, you own your truck outright, and this truck is worth $50,000 in today's market, and you work your butt off, sweat, blood, and tears to do this. You thought you were being slick by not getting physical damage coverage because you're such a good driver and you'll never get into an accident. As you know, it's not you, it's everyone else on the road you should be worried about. The car whips in front of you, and you steer off to avoid the collision. It's been determined that your truck cannot be fixed. The absolute worst news. Guess what? You may have saved a couple $100s every month, but now you have no truck and no insurance company to write you a check. Alternatively, in that situation, if you had insurance, your insurance company would cut you a check for the value of your vehicle, which you can use to go and replace that truck to ensure your business continues and that you are producing money for you and your family. Do you understand now? Sounds unlikely? It's not. We've seen and heard about it many times. It's a terrible situation to be in. Do not underinsure and ensure you always have physical damage. Apart from protection against losses to your equipment, which physical damage coverage, there's a liability coverage that you will most likely be required to have as an owner-operator if you're leasing or financing a truck. This is known as bobtail or non-trucking liability. Bobtail insurance is like a safety net for truckers when they're driving their commercial truck without a trailer. It covers you for accidents and liabilities that can happen when your truck is on the road but not pulling a load. It's like a just-in-case insurance for those empty trips. Here's an example. Let's say the driver is on the way to pick up a new load or heading home after a delivery. If they're involved in a collision, whether it's their fault or not, bobtail insurance would cover the damages to the truck and any liability costs that may arise from the accident. This coverage ensures that the driver is protected during those times when they're not actively pulling a trailer but are still on the road. If you're leasing or financing equipment and have a contractual obligation to make payments to your lender, then we always recommend you consider having what's called gap coverage. Gap coverage, or guaranteed asset protection, is an insurance coverage that covers the gap, or the difference between the actual cash value, ACV, of your vehicle and the amount you owe on the loan or lease in the event your vehicle is stolen or totaled in an accident. This is additional coverage to your physical damage insurance, essentially an added layer of protection on top. Check with your insurance company who's providing this gap coverage for details, but generally speaking, this is how gap works. Let's say you finance a truck and you're making payments to the bank. You get into an accident and unfortunately your truck is totaled. It cannot be repaired. Good thing you have physical damage coverage, because your insurance company will determine the value of the vehicle at the time of the accident. In this example, let's say they say your truck is worth $50,000. However, the amount you owe on your contract to your bank is $60,000. You have a delta of $10,000. Good thing you have gap insurance, because the insurance company would pay the $10K that you would have been responsible to pay out of your pocket. If you don't have this coverage, you would be out a truck and having to come out of your pocket $10,000 to pay the bank off. This is a general example of how gap works, but it's imperative to understand the limits and exclusions specific to your policy. Not all gap policies are the same, and they usually come with stipulations. Let's talk about some common coverages for carriers. If you're looking to operate under your own authority, meaning you have your own MC number and DOT number, then you need to be familiar with these insurance coverages. Remember, this is not all of them, but in our opinion, these coverages are the ones you should be most familiar with. Whether you're an owner, operator, or carrier, you're gonna need that physical damage. Now, we already covered it earlier in this video, so if you don't understand, go back and check it out. The next one is primary liability. Primary liability protects you against bodily injury and property damages caused by your business activities directly related to using your truck. If individuals in another vehicle are injured due to an accident that you're found at fault, primary liability insurance would cover the medical expenses, rehabilitation, and potentially legal fees. The next one is cargo. Cargo liability covers the value of the cargo your trucks are transporting. It's essential to protect against damage or theft of the goods you're carrying. Imagine you park your truck loaded with a trailer full of expensive electronics. You run into the truck stop to get a bite to eat, you come back, and your truck and trailer are gone.
Yet still, you robbed his truck.
Cargo insurance will pay out the lost electronics up to the policy limits. Always make sure you have enough cargo coverage to cover the value of the loads you are transporting. The next one is general liability. General liability pays for injuries or property damage you cause because of business activities not directly related to using your truck. General liability coverage extends beyond accidents on the road. Here's an example. General liability would cover you, let's say if you were sued for a slip and fall accident that occurs at your warehouse or office. The next one is trailer interchange. Trailer interchange is basically physical damage coverage for non-owned trailers being pulled under a trailer interchange agreement you have. Trailer interchange will cover you in the event you are responsible for damage to a trailer that you do not own. The next one is reefer breakdown. Reefer breakdown covers you in the event your refrigeration unit on your trailer malfunctions, causing your load to spoil. It protects you against claims made by a shipper, receiver, or broker. Here's an example. Imagine you are hauling a trailer full of frozen seafood, and your refrigeration unit gives out and the entire load is spoiled. The damages could easily reach $100,000. Reefer breakdown will protect you from having to come out of pocket to cover those losses. Pretty straightforward. The next one is workman's compensation. Workman's compensation is coverage that is vital if you have employees, as it provides benefits for work-related injuries or illness. Let's say your dispatcher falls and trips down the stairs of your office and gets hurt. They say they cannot return back to the office for the next 6 weeks. Ugh. Workman's compensation will pay out a percentage of the employee's gross wages that the company would otherwise be required to if the company did not have this coverage. It's good to have if you have employees. The next one, E&O, errors and omissions. An E&O policy protects you from claims related to errors or omissions in your business activities that lead to financial loss for others. Imagine you are shipping a load of ice cream and the reefer unit needs to be set specifically to 31 degrees. Unintentionally, you write 65 degrees on the bill of lading. Because of this error, the entire load is melted and useless. E&O may provide coverage to offset this financial loss. It was unintended, it was an accident. Everyone, I know this was a longer video than usual, but we really wanted to pack it in. There's so many more topics and details that we would love to go into, but we thought it would be helpful to those of you who are just learning or maybe need a little refresher. Now, we would love to make more videos. For example, how deductibles work, how to shop for insurance, how to get fair quotes, how to bind it, all of the above. But really, we want to hear from you. What do you want to know more about? Put a comment below what you want to hear about, what you want to see a video about, and we'd love to make a video for you. Hey, if this video was useful, leave a comment, like, subscribe. We appreciate it. We'll see you on the next one.